taking a look at Nvidia this morning and this note that they've got out on lowering the revenue expectation, saying that the global economy decelerated sharply, particularly in China, but it doesn't say only in China. And I'm wondering, particularly as we head into this earnings week, we've got Microsoft, we've got Amazon, we've got all this commentary around data center and cloud slowing down, but the estimates for their cloud businesses have not slowed down. Do you think that's perhaps a mistake?
Good morning. Yeah, let me just step back a second and just talk about tech and semis in particular that I cover. What we have been seeing over the last week and a half is earnings have been coming in lower. Companies have been talking about the impact from just from the overall slowdown in China, consumer as well as internal China spend getting weaker, and the impact of the tariffs. But I'm going to toggle over to Nvidia. I think for Nvidia, it is not just a matter of China slowing down. What we have been pointing out is this company was, in our view, the growth in the gaming center was artificial, driven by the crypto market to a large extent. And then if you look at the data center market, they've done a great job in training. But as we go in machine learning from training to inferencing, so think of it as prototype versus production, there's a lot more competition. And so we've been very skeptical of Nvidia. We're not really surprised. In fact, our estimates for the full year are pretty much below the street, and we have been below the street for a while.
Paul, broaden this out for us a bit, because I am wondering specifically, it's not just Nvidia. We've had warnings from Micron, from Apple. Micron in particular also talking about cloud and data center buying slowing down. Could that mean that actually the momentum in the mega-scale cloud providers like Amazon, like Microsoft, is actually slower than analysts have estimated up to this point?
I don't think so. We may have a deceleration of growth, but it's still within IT spend is probably the most robust area. And I think when we have the results, particularly from the cloud-oriented businesses reported by Microsoft and Amazon, we'll get some confirmation of my view. In the meantime, with a little bit slower growth, we have a situation with Nvidia and some of these other chip makers that they are in a modest to a fairly severe inventory correction. And so when they come out and talk about geopolitical, macroeconomic factors, yes, they are impactful, but not as much as the buildup of inventory, which hasn't been drawn through. And I still believe that for the semiconductor industry, we're going to see some alleviation of that issue in the second half of this year, and these stocks could work very well, particularly as we get better visibility into what happens between this summer and December 31.
Mitch, digging into Nvidia a little bit more specifically, you have an outperform rating on the stock, $200 price target. Given the announcement we just got this morning, you sticking with that?
Yeah, so I don't think much has changed in terms of the long-term story. I think we actually were on this segment here about a month ago flagging this inventory correction due to cryptocurrencies. And I think what's going to happen here is you're going to have to see a digestion phase, which we haven't seen on the hyperscale side and also on the gaming side. But then as we get to June, I think you'll see a pretty significant change. Turing should probably have more games associated with it. Data center will finally be through its problems. And then third, I think one that people are not thinking about is when Ethereum switches over to Prague proof of work, your cryptocurrency demand comes back because ASICs are no longer viable. So I think all three of those things are more of a back half story. So I kind of agree with the prior comments that this is more of like a September quarter, December quarter. But essentially the near-term dynamics are negative.
You know, Paul, when I think Nvidia, I think of one of the most beloved stocks of the entire bull market. And that's clearly changed. I'm wondering what it means for the rest of the leadership group within FANG. I mean, it was always attached at the hip, and how much hedge funds have liquidated these positions and other investors have fallen out of love with these stocks, and what that's going to mean for 2019.
Well, the way I look at Nvidia, it's a little bit of a different situation than the rest of the FANG. But yes, it has been a leadership company, and the problem with a stock like this is it's always been expensive. It always will be expensive based on traditional valuation metrics, so you're never really going to be able to make a valuation case. And that is the rub, because we have some stocks, including some names in the FANG, which are starting to at least show me that they're at least GARP. growth at reasonable price investments. The problem with Nvidia, when it goes from PE of several hundred down to a PE of 100, it's hard to make the valuation case. So you have to see momentum there. I do think we will see momentum return with Nvidia, but again, it's a second half story.
Ambrish, close this out for us. AMD also down this morning, almost 5%. It was one of the best loved stocks of 2018. Do you see these stocks as buying opportunities based on the sense that maybe semis aren't performing overall as badly as investors might think?
Well, for semis in general, we've actually gotten more bullish as the stocks has sold off into late last year. And in fact, we just upgraded Micron a couple of weeks ago. First time we are recommending a memory stock. So we're actually getting more bullish with some specific stocks. So with specific names, we would agree with Paul and say, yes, there's a second half play. Things are pretty bad. These are cyclical stocks. And bad news in certain cases is expected, and estimates have come down. When it relates to AMD, that's another name I'm not a believer in. And I think estimates are way too high, expectations are way too high, and I just don't think they can execute and make money on a consistent basis. So that's why we're not jumping up and down.
Mitch, same question to you.
Yeah, so I think that's pretty fair on the memory side. I think they're getting towards kind of the end of the pain period. Historically speaking, you don't really see 5 or 6 quarters straight memory declines, but when I look at it, I think you got to pick your spots, right? So I think that the semi cycle probably improves in the back half of the year. I think we still have more pain there. And then for AMD, I'll actually take the other side, but I think that's going to take at least 2 quarters here, because essentially when you run the test on Amazon Web Services on Epic, it already outperforms Intel in several instances. But you have to wait for Epic 2, because once you get the data from that, you can decide how big the share gains will be. But again, so I got to be careful here. The near-term numbers, we took down numbers for Q1 and Q4 for AMD and Nvidia because of the gaming issue. But again, I think back half you'll start to see share gains from AMD.